Hi guys, this is me, Alexander Bobo, once again. Today I want to talk about Forex. I'm a Forex trader and I started Forex in 2023. And I've blown many accounts, okay? I reached a point where I saw that I'm more into gambling. Forex is a scam because I saw that my chances of winning out of 100 were 1%. My chances, yes, I've won on several occasions and I got excited, but the reason why I lost was not justified. Because one is that before I started deeply investing money into Forex, coming back to back, I first took time to read the fundamentals or the basics, understanding the charts and the candles, what they do, what they mean, how they move, how do you know that they're moving, which areas is liquidity, order block, and so on, and strategy. At some point in time, you realize that even the strategies they use are just a distraction for you not to think outside the box. For example, the Fibonacci. Someone can use the Fibonacci just to control the range in which you are targeting your setups. So most of these indicators or strategies, I would say, are just guidelines for you not to jump out of the circle or area of target, but they are not more well. And one thing I realized is that the candles don't respect the principles you learn. That when you see a morning star or a hammer, it's a typical reversal. When you see an order block, it's a typical reversal. When there's a fair value gap, the market is coming to pick liquidity and go back. All those things are there, yes. The market has done it on several occasions, but no one knows where the market is going. Okay? The strategy I've been using was I went back and saw my trades, how I used to win. The most of the trades I've won were trades I entered when I was chasing market. I had to, because when I tried all these strategies and I saw that they are losing, I said, let me not take advice from anyone, let me do my own analysis basing on what I know. And the first thing I did is come up with a strategy. Now, I was doing what most people don't do. Most people advise you to wait for support and resistance. Actually, to me, I saw that those are the most dangerous places for you to enter trades. Because I open my accounts, I deposit $10. Now, you cannot tell me that you can manage $100 or $5K or $500 account when you can't manage a $10 account. It means you should be able to manage this small account in order to see that you achieve. Now, I used to trade small money. Use the lot size, smallest lot size. I enter the trades. I trade pairs that are not so volatile, and they move and possibly are also decisive, like the JPY. With some pairs, the card also moves, and then NZ. There are pairs which move, much as the volatility is not so much or liquidity is not so much. So I could make $50. Then I look for another entry, I make another $50, like that. At the end you find I've made like $1.5 in a day. So my account has moved from $10 to 1.5, 11.5. Reaching there, maybe I start also messing around, going to big pairs like Euro, USD, and so on. You find that just in a small while, I've lost $50, and of course I'm already losing track. So I find myself quitting and selling me call it a day. So the week ends when I push my account from $10, 13, 14, $15. Okay? But the strategy, this strategy I was using was chasing the market. Okay? You go to the 4-hour time frame and 1-hour time frame, you see where the market is going. Once you see where the market is going, you come to the 15-hour time frame and you see what the candle is doing, what the previous candle did, and what you think. Then to break it down further, you come back down to the 15-minute time frame and you make a confirmation. We saw the breakout, so the market is rising, it's going up, and the market is bullish. So what do you do? Well, you look for an entry. Of course, at the 15-minute time frame, you look at the candle patterns. There will be ups and downs, making higher highs and lower, higher highs and lower lows. So at that point in time, you'll wait for the candle to make a lower high, and then from there you look for positions, and behind the lower high, under the lower high is where you put your stop loss. That means you'll be risking like $50, and you trade that. So once it goes, when it stops you out, that's a loss for the day. When it goes up, I don't close the trade, I leave it open, but I move my stop loss significantly. At least when I know I'm in the safe zone, I break even. When I know I'm $1 plus, maybe $2 or something, I move it. I know that when it reverses against me, I'm out with $1. At least I would not have wasted my time for no good reason. So at that point in time, I was growing my account slowly until I realized that I'm making money slowly, and I realized that my strategy works. But I need to make more money. So of course, making more money has to mean over trading. It has to mean that you also go outside the box of discipline. You know, your discipline has a circle. When you cross that line, you always losing it. You are not in control. It is now your emotions, your ambitions, your greed, everything which is controlling. So I would take back the word that Forex is a scam. Well, I would say that my ambitions are way out of hand. This year I'm considering coming back to Forex, but what I can tell you guys is that if you have work to do, don't quit your job to do Forex. Do your work and give Forex the time it deserves. You don't need a whole day to trade Forex. And besides, when you have something else to do besides Forex trading, it is good to distract you. So this year, I want to resume Forex trading, but this time, I'll use my initial strategy that I've been using. One step at a time. $50 is also $1. At some point in time, you realize that when you win 2 trades of $50, you can make up one. Forex is tricky, it is fundamental. If you're going there to make money, please quit Forex. This year, I'm going to trade, but this year will be decisive. It will decide whether I quit Forex for good or I'll trade Forex for the rest or for the coming years. If you want to trade Forex, you should have a side source of income, something that can generate you daily income. Because with Forex, right now you have $100, in the next second, 10 seconds, $100 is gone. And in the next second, you have another $100, and in the next second, it is $200. In the next second, it is $1,000. In the next second, it is negative $100. So Forex is gambling and it's unpredictable. You just have to trust your instincts. You have to develop your own strategy, how you understand the market. I used to have 2 things. First is you look at how the market is moving, and 2 is you study the patterns. Do you know that every week the market comes with a different pattern? There are some weeks where the market comes and you realize that It's actually you find that we have order blocks and points of reversal. You see the market is moving higher highs and lower lows. Oh, it is a ranging market, but you know whenever it reaches and makes they say then 3 black colors and so on, you realize that there's a reversal. So basically that's how Forex is, but all I can say is it's been a year since I last did Forex trading, so I want to come back. It's almost 10 months. I blew up my account, I grew my account, and significantly I also withdrew. Yes, much as I blew it, I had blown it when I had already got back what I put. Because I withdrew around $7 2 times, and yet I deposited $10. So I wouldn't say that but it was a bad idea. Of course, I went out of my discipline. Discipline was out of hand, and that's the reason why I lost the account. But this coming year, I want to give it another shot, and this time, I want to take it step by step, see how far it can take me, how far I have self-control over myself. Well, I've also been reading some books. If you don't mind, you can find yourself some books to read. Reading also helps a lot the brain.